Us now to discuss this further, Secy Tripathi, the former oil secretary, and A. Prasanna, the chief economist at ICICI Securities. Mr. Tripathi, let me start by asking you, sir, you've seen prices globally which are much higher than what they are currently trading at. About 80, we've seen prices go well beyond $100 during the UPA's time, sir. We understand the government is now looking at a comprehensive package to try and provide some relief, and that an excise duty cut in isolation is not the consideration. What will be the things that the government can tinker with? What could be those levers, Mr. Tripathi?
Well, in 2013, the rupee had touched 66, 67 rupee to a dollar, and the crude prices were hovering around $114, $120 to a barrel. We have seen those days, and at that point of time, of course, the government had cut down the excise duty. The excise duty on diesel was 3 rupees a litre, and petrol was about 10.5 rupees a litre. Since then, government raised it to 17 rupees a litre on diesel and about 21 rupees a litre on petrol, and has collected substantial amount of money every year, almost additional revenue coming to about 180,000 crores rupees in a year. But I agree that merely excise duty cut by rupee, etc., will not be enough. I think stabilization of rupee is important, and some moderate cut in excise duty as well as that may be required. And at the same time, one should look at the margins that the companies are making in the dealers' commission. And over a period of time, I think they should lay a roadmap of bringing it under GST. Now that both direct and indirect taxes are showing buoyancy, they should lay a roadmap whether in 2 years, 3 years, 5 years, they'll bring it under GST. And when they bring it under GST, what would be effective rate? Whether it will be 28% plus cess to make it 40% or 50% or whatever it is. Because right now, we, among the developing countries, we have the highest prices for petrol and diesel.
Yes, we do, sir. But, bringing it under GST is going to be something that can be explored in the medium to the long term. In the short term, that's not an option necessarily that the government can push through to bring about some relief. But I'll come back to you, sir. Let me go across to Prasanna. Prasanna, you just heard the options that Mr. Tripathi was speaking of. And this is not uncharted territory, and these are not untried methods. These have been tried in the past, especially under the UPA. As Sapna was just reporting, the government now looking at a comprehensive package, a series of steps. What would your take be?
No, first of all, I think a couple of things we have to remember. One is that some level of price transmission has to be there. I think this was one of the problems before the prices were deregulated that the economy was facing, that the consumers did not get the right price signals, which meant that the demand conditions probably was not getting calibrated in terms of price and supply, right? And of course, that led to issues with the health of the oil companies and the government's fiscal position as well. So there is no doubt that the price transmission has to be there. There has to be a relation with the global prices. Now, second is, of course, the taxes are quite high. So it's basically when the global prices fell, the government hiked the taxes. So now I think it's logical to expect some reduction in those taxes. But the issue is, even with those higher taxes, our fiscal deficit is still not under control. It's still about 3%, 3% being the medium-term target. So then the question to the government is, if they cut the duties here and therefore the deficit goes up, is there any other place from which they're going to get extra revenues, or are they going to get spending somewhere? I think that is the bigger issue which the government has to grapple with.
Yeah. Absolutely. Whether they will cut spending, which in an election year is going to be a big question mark, and they're hoping that at least from areas like disinvestment, they will be able to shore up revenues and the GST numbers will continue to look better. But Mr. Tripathi, just to pick up on the point that Prasanna was making, that it's a slippery slope. I mean, we are now in an era of deregulated prices. If you want to go back to an era where the government dictates, as it did during the Karnataka elections, and a day after the Karnataka elections, we were back to normal. But, this is a slippery slope, is it not, to go back into an era of regulated pricing? If at all, that is the route that they may take. We don't know whether it will be something that the government will finally take forward.
No, one is not suggesting regulated prices. But this is something, the demand for petrol, diesel, etc. is inelastic. And when you have on basic price 100% duty on petrol and 80% duty on diesel, then it is not a reasonable or a very normal duty structure. It is an abnormal duty structure. You are putting it under the same goods, and that is what one is suggesting, that bring the duties to a reasonable level. As I mentioned, our refineries supply to many of the neighboring countries, and all of them have prices much lower than us. Our consumption of petroleum products is 1/3 of world average. China is 5 times us. USA is 20 times. Europe is 10 times. So these demands are inelastic. The modern life is so critically dependent on oil and its products that the kind of life one is expecting will require more and more consumption, at least for next 10, 15 years, unless we are able to make a major breakthrough in renewables and nuclear. So the demand being inelastic, I think there should be some consideration for the level of taxes that are being imposed, and particularly at a time when the prices are going up so high.
Right. An abnormal duty structure that's been imposed on fuel prices in India. But Prasanna, let's talk about the fiscal math, because as Sapna was reporting, a 1 rupee cut could lead to a hit of about 13,000 crores. From a fiscal position, if they do go in for a 1 or a 2 rupee was the last cut that we'd seen in excise in 2017. What could the impact be given where we are today and the challenging macros?
Yeah, that's right. So 2 rupees is 26,000 crore, and that will be roughly 0.15% of GDP. So from 3.3% straight away, then we are looking at closer to 3.5% just because of one duty cut. As it is, we think the budget did not provide completely for a higher MSP or for the new healthcare scheme. So therefore, we anyway think the fiscal numbers were prone to some slippage. And now if you on top of that, if you add this duty reduction, potential duty reduction also, so then we are probably looking at a fiscal deficit going to something like a 3.6, 3.7% kind of a number, which again, if you look at how the bond market has been behaving over the last few months, precisely because of this reason that the government is not able to meet its fiscal targets, it means it will put further pressure on interest rates, and of course that will have an impact that will have an economy-wide impact.
Well, it is a tough balancing act for the government. It is not going to be an easy one to deal with, but this is a work in progress, is what we're given to understand, that the government is looking at a series of steps, and they do acknowledge that an excise cut alone will just not cut it any longer. Former Oil Secretary Secy Tripathi and the Chief Economist of ICICI Securities, Prasanna, appreciate you joining us here on CNBC TV 18. We'll take